Welcome back everyone, I hope you're having a great day, and in this video we're going to take a look at my dividend portfolio that has grown to a value of over $150,000. If you're new to the channel, I'm the Gen Z investor and my goal is to achieve true financial freedom by building up a long-term stock portfolio full of blue chip dividend paying companies. These are the companies that provide you that growing passive income every single year, and the overall goal is to one day achieve financial freedom where I earn enough income from my portfolio that I no longer have to go to work to make money and can retire and live my life off the income produced from my portfolio holdings. So right now we're in the building stage of that goal, currently sitting with a portfolio value of $150,000. And in this video, I'm going to share with you all my current holdings, go over the portfolio performance, and of course, we're going to take a look at how much dividend income my portfolio currently produces every single year. And if you're interested in following along with my financial freedom journey, please hit that subscribe button. I will be back posting regularly on YouTube. This is my first upload in over a year. I have taken some time off due to some family reasons, but I'm back and I plan to consistently post, sharing my journey and my updates every single month, going over my new buys and sells and the overall progress I'm making towards my dividend journey. So right now, if we take a look at the portfolio, we have a value of $150,445. And we can see over the last trading day, that did decline by close to $3,000 overall, or 1.9%. Over the past few months, the market has been very volatile and the S&P 500 has dropped over 18%. So my portfolio has seen that effect and has fallen as well. But if we take a look at the overall performance, I'm still up 11.3% all time on this portfolio, or just over $14,000 in total gains. And this gain number is just the share price performance. It doesn't actually include all the reinvested dividends that I've received, because once I reinvest the dividends, it gets added to the cost per share basis, and that does not get represented on this overall portfolio value. So I am up a bit more than what this is saying, just because of the reinvested dividends I've received over the past few years. And now we're going to jump over to Simply Safe Dividends to take a look at my portfolio dashboard. So we can see I have all my holdings uploaded into this software. We can see the current value of $150,000, and my overall dividend income this portfolio produces me at this current point in time is $3,478 every single year, which gives me a dividend yield of 2.3% overall. And right away, I understand this yield is very low. Many people in the comments down below are going to be like, why are you even investing in dividend paying companies if the yields are not 4, 5, 6%? But there's a reason to this. I don't need the income right now. I'm very young. I'm in my early 20s. I need this dividend income to grow over the long term, and my focus is on buying strong blue chip companies that I do believe will continue to provide that passive income and grow it many, many years down the road. I don't need that current income. I'm not retiring anytime soon. I'm not living off this income right now, and I'm very comfortable having a lower starting yield, but putting my hard-earned money into stronger companies that I believe will be able to perform and earn income and cash flow for 20, 30 years down the road. So right now my portfolio produces $3,478, and every single month as I contribute more money into it, buy more stocks, collect my dividends and reinvest, this number will continue to grow month over month long into the future. And because of the dividend growth of my companies, my yield on cost is right around 2.68%. We can also see that the beta for this portfolio comes in at 0.85, meaning I'm slightly less volatile than the overall market. That's just due to the companies that I own. I own a lot of boring companies that produce free cash flow every single year. The companies are not very volatile in terms of share price movement. They kind of consistently grow over the long term. So it kind of makes sense that my beta is slightly below the total market average. And if we now actually take a look at the individual stocks that I own in my portfolio, I own 23 different equities within my financial freedom portfolio. Every single company pays a dividend that continues to grow year after year. So my overall holdings are sorted by their current market value. So the largest position in this portfolio is Microsoft. I do believe this is the best company in the world. They produce growing revenue, net income, cash flow year after year. They have a nice subscription model of revenue. They generate consistent income every single quarter. And I do believe they'll continue to be one of the best operating companies for long into the future. I own 82 shares of the company that has a current market value of over $19,000, and I'm up 14.2% on my Microsoft holdings, which represents 12.7% of the total portfolio's value. And now if we move on into stock number 2, we have Apple. I own 126 shares worth over $17,000. And this has been one of the companies I've been buying since I first started investing. Apple's one of the first stocks I've ever purchased, and we can see I'm up 31% overall on this position. And we can see because of the current market volatility, Apple and Microsoft are sitting near their 52-week lows. The companies have seen a major pullback. Microsoft, for example, was at $350 per share and has pulled back all the way down to $232. So right now I do believe big tech is at a nice buying level, and I do plan to add more to my top 2 holdings over the next few months if the prices continue to sit at their current levels. And now if we move on to stock number 3, it is Pepsi, ticker PEP, currently trading for $163 per share. I believe this is one of the best consumer brands companies in the world. They have over $20 billion brands under the PepsiCo umbrella. They operate in the beverage and snack food industry and sell products I believe consumers will continue to buy every single week, every single month for years into the future. I think Pepsi is so well diversified across the healthy food, salty, sweet, and beverage industry that I don't see many other competitors knocking them out of their market leadership position amongst many different consumer brand categories. My 83 shares in the company have a value of over $13,000, and I'm up around 35% in PepsiCo, which makes up 9% of my total portfolio. And now moving into stock number 4, that is Costco. I own 18 shares of the retail giant worth over $8,500, and this company has seen some massive share price appreciation over the past few years, and I'm up 41.5% in the retail king. So Costco, doesn't matter what economic situation we're going through, they continue to perform extremely well, posting record high revenue, net income, and cash flow numbers quarter after quarter. This company is just a beast. I love shopping there. I spend a ton of money there. So I believe I like buying the companies I like to use myself. So if I'm a consumer that likes to shop at Costco, spends a lot of my disposable income there buying different food items or even consumer goods, I like owning that company because I believe many other consumers have the same mindset as me and will be spending their hard-earned money in Costco as well. And of course, it's good to see whenever I go to a Costco, it is packed. The lines are full, every register is open, consumers are flying in and out of the store, so I believe owning a company that I personally like is a great addition to the portfolio. And now into company number 5, we have JP Morgan Chase, one of the largest financial institutions in the world, the largest US bank in terms of assets, and overall, the company trades for $104 per share. I own 68 shares for just over $7,100 in total value. And overall, you can see I'm actually down in this position by 17% in the red, or just over $1,400. I'm a big believer in financials. I love the income, share buybacks, and dividends they pay out. So overall, I am a net buyer in the financial industry. I know we're in a kind of critical environment with an upcoming recession, the way interest rates have been moving up and down over the past 5 years. But overall, I still love JP Morgan Chase. I own a few other banks deeper down in the portfolio, and I am still very comfortable having it as the 5th position in my overall portfolio, making up 4.7% of the total value. So those are the top 5 holdings: Microsoft, Apple, Pepsi, Costco, and JP Morgan Chase. And in future videos, I'll go in depth with all my other stock companies, sharing with you why I own them, why I picked these specific companies out of a large market of many different options. I'll go through all the different industries I own and which companies operate within each specific industry, and I'll take a look at the portfolio performance for each company as well. I do like to own a few different companies within each sector. If we jump back into Simply Safe Dividends, my sector diversification is spread out amongst 8 different sectors of the market. Number 1 is, of course, technology. You can see my largest portfolio holdings are Apple and Microsoft, and they alone make up around 23% of my total portfolio. Then I'm a big into consumer staples. These companies operate within any type of market environment. Through a recession, depression, boom, or bust, these companies continue to generate income, pay out those dividends, and that's what I want for my financial freedom portfolio. And then, of course, following that, I have financials. Like I said, I'm a big believer in the financial industry, followed by some utilities. These companies are in the utility sector, of course, don't grow as fast as the others, but they provide consistent cash flow month in, month out, or quarter over quarter. Then, of course, a little bit of healthcare, some consumer discretionary, a tiny bit of industrials, and a tiny bit of communications as well. So we can see I am somewhat diversified across many different sectors of the market. I am top heavy towards tech and consumer staples overall. So that was a quick summary of my total dividend portfolio that currently sits at $150,000. As this is my first video back to YouTube, I wanted to give just a quick overview of the portfolio. As I previously mentioned, in future videos, I'm going to go more in detail on each specific holding, go over my investment thesis behind that individual company, and why I added it to my dividend portfolio overall. So I want to thank you for watching the video to the end. If for those of you who are new, please hit that subscribe button. I will be back posting more consistently on YouTube. I did take a little bit of a hiatus due to some family reasons, but I'll be back posting consistent content, sharing my opinion on the stock market, showing the growth of my portfolio, and sharing updates with any major market news. So thanks for watching to the end. Please hit that subscribe button if you already haven't done so, and I will see you in the next video.